G'day everyone, welcome back to Pete's Investing. Today is April 5th, 2023. This is the spot gold price update. On the daily, the 4 hourly and the hourly, our CCI indicator is all in a bullish momentum. So only buy positions at the moment, no shorting. And you can see for the price recently, it's actually done quite nicely. And let's drill down for each of these time frames. On the daily, we did have this key resistance area, and since overnight, it's actually broken through that resistance, so we're going to replace that with a new resistance in the next chart. I'll show you that on the 4 hour chart, but basically I just want to talk about this first. Between that high and that recent high, and that low, we always say anything above the 61% level down here would have been anything. If it had the price had broken below that, that would have been a potential reversal. So any bounce from there up, or say in this case it bounced up from nearly the 38% level at 1931, that would have been a potential further buying opportunity. So that's where we are on the daily. Let's go to the 4 hourly. As I said, this is forming as a new resistance. I'm going to put a dotted line there, and that should confirm in the coming probably the coming hours. So that's going to be our new major resistance being forming. Now that's no guarantee on that, it could still break higher, but at the moment I'm going to keep that hard resistance there for the moment, because the price may come back and consolidate there, or if it breaks higher then that will probably evaporate both of those lines as well. Now one thing to notice as well is I drew these two diagonal ascending and descending trend lines. Now obviously it's broken above that upper level, that initial resistance, and it's broken above this key resistance at that level there. But one thing I want to do as well is just to sort of highlight what it may be doing. Now notice I'm going to draw from that high, not this recent high, but that more high back there in late March. I'm going to zoom out, and I'm going to draw some based on those lows there. See that those couple of lows there. Now if you drill into there now, I'm going to get rid of this previous descending. It's actually forming a new wedge. So we may see it actually come down from there, potentially, if that new resistance line plays out. We may see it come down from there, or as I said, we may see it break higher. But at the moment, again, zooming out, you can see there we're still pretty high on the CCI above its moving average, and we always see that gravitate back towards the moving average, as it does always historically. So there's no guarantee it's going to come back, but at this point, the probability is pretty good. It may well come back and start consolidating in that range. So let's look at the hourly chart. And again, you can see that two ascending diagonal lines at the moment I've drawn. One thing to look out for as well, is just a bit of a trading idea or trading thing to look out for, is divergence. You can see here, back here, the gold price was in a bullish divergence at this point back in early 23 in January, and the CCI was in a bearish divergence on the hourly chart. And once it broke down from that level there, that would have been an ideal area to go short if you were trading this in a shorting environment. You can see there it broke down, so that would have been an ideal area, and then not going long again until it breaks above that level there as well. Now the other thing I want to show you as well is in terms of a trading idea. You can see there I'm going to put in these fractals. So again, at any one of these points back here, and I've got this little indicator down here which tells you where the candle broke above the fractal, and that would have been an ideal place to go long. So during any one of these positions where it breaks to the upside, you would have ignored any short positions. So let's just drill down some of the more recent run would have been at that point there. You would have gone long when it broke above the fractal, and that blue line signifies the target. So you would have been hit the target once it on that large candle on that point, which happens to be our recent resistance area. There is no new breakout yet, and the more recent one before that would have been back here, the start of April. It broke above the fractal, and that would have been your target area, and you would have hit your target at that level a few hours later. Before that, at that level there, it broke above the fractal, and that would have been a new target area. Now you wouldn't have hit the target until a few hours ago when that bull candle broke above there. So that's the way, and you don't trade these positions where they show short when the CCI is in an uptrend on the hourly and also the 4 hourly and the daily. And that's where we are at the moment. They're all 3 timelines are in a bullish momentum, so take only long positions. Now, if you are caught out going long and it drops against you, to understand more how to trade using the average down approach, reference the links in the description below. Subscribe and support us more on Patreon, and we'll see you in a future video.